Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. Good. Welcome. Hopefully everyone was able to rest up, get ready for the day ahead, all that fun stuff. Finally going into Friday here, so make sure to end strong. Remember, Fridays are one of those days where it's a bit of a teeter-totter, right? You know, if you end the Friday really well, then you just secured one of the best weekends you can ever have, right? But if you end the Friday just getting your teeth kicked in, you will secure one of the worst weekends. So it's a very touchy type of day where typically it's better off to trade a little bit lower size, get yourself a little bit more out of the psychological and more into the technical so that you don't have any issues. But just throwing that out there, keep that in mind. Before jumping in, as always, on the left side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Just want to take a second to give a shout out to all of the latest members that joined overnight and yesterday. Thank you so much for the support. I'm pumped to have you on the YouTube family and on the SSFTG family. If you aren't a member of SSFTG or a part of the YouTube family, check out the join button below the stream to gain access before our next private webinar. Get access to the Discord chat, not to mention the awesome badge next to your YouTube name to show your support and all the other cool stuff that comes along with it. If you're trying to figure out what it is exactly that we're doing here, look no further than the Day Trading Academy over on SSFTG. Day trading, the Academy comes loaded with 19 plus hours of material, and that doesn't include everything else in the down the rabbit hole at the bottom. So huge amounts of course material to help you get started and just kind of get you going in the right direction. Now, keep in mind, on the YouTube side of things, there's going to be about a 3 to 30 second delay. Nothing I can do about that. But unfortunately, it's just the side of YouTube. Now, if you want to level up to VIP status, you can enjoy the exclusive permanent access to the non-delayed side of things, and that's over on the Zoom Direct Meetings side, as well as the monthly VIP webinars. There's one actually coming up tomorrow. Don't forget that for you VIPs. Tomorrow morning at 10 o'clock, we've got the big one going over order flow, so it's going to be a really fun one. We also have private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here and you're totally new or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at some charts, take a look at some news, see what's going on today. Make sure to grab your morning DP levels. Those are posted for you this morning for the major 7 markets. And as far as the charts and everything else, the big thing that we've got going on right now, if we look at the bigger picture here, is that we had that giant dive and, well, look real close. They never made a new low. Oh, man. Talk about vindictive. So huge, massive slide to the downside. They have not made a new low. That does not mean that the sellers cannot take back over. In fact, we're setting up in somewhat of a Mac whack to the downside. And it looks like, the fact that we've got a double top and the MACD is really starting to kind of coil back over again, we're getting some clues that if we see some downside pressure, we start getting below settlement, etc. That could be some pretty big ideas that sellers are looking to finish the job. Now, if we look back at the previous leg to the upside before that giant dump, we can see that the average was relatively weighted in the middle. So the assumption then would be that these would be buyers, right? We've got buyers that are coming in, they're buying into the pullback, etc. But we've got to look at this in context. The volume didn't happen over here. The volume happened over here. So we've got to take a step back and kind of realize, oh, wait a minute, what could these traders be then? We've got a big bulk of volume here. Nice cluster. It's more towards the high side of things than the low side of things. It did break higher, big stop run. Now I've got more, and it's showing or demonstrating accumulation. Okay, giving us a little bit of a clue. Maybe this is more than just profit taking and buyers buying and continuing back up because they're showing a lot more volume than that. And if we include that move and go all the way back to today, we can see that they built up a ginormous amount of volume. And now that we're back down here again, we're beginning to shift the POC. The obvious thing right here, whether this does break down or it reverses and goes back up, is that the middle, it doesn't typically like sticking around there. So if the market starts getting above this area at 818 or below that area at 818, whatever side it's coming from, it usually doesn't want to hang around too long before it goes screaming through there. That seems to be a relatively obvious agreement in the market. Aside from that, there's a lot of volume that's building up, so much so, in fact, that this is now accumulation volume down to the 13,770s. But, right, we're not really seeing the buyers show up to the party yet. That's the concern. Got to see a bit more info yet. Really interesting as to how this is all playing out, though, especially considering how V-top, V-bottom, V-top, V-bottom this thing has been. There's a lot of traders who are stuck on both sides of this thing. Looks like it's very low in the general scheme of things. If we look over on the S&P, similar situation. We've got another one with a Mac whack to the downside. Giant dive to the downside yesterday. If we look at just that leg lower to when it completed, right? I just want that move down. Gotta go back a little ways. There we go. What do we see? Well, it's pretty obvious what happened, huh? I mean, hindsight 2020 and all, but that, geez, oh Pete, they did not spend a whole lot of time up there, and that thing got obliterated. The POC was there at 41.6975, and the thing just slammed. You can see a very obvious stop run. Even on the S&P, there were no orders that traded there, or there. Big stop run, right? This is a no-joke stop run. This ripped people's faces off. When it came down to the lows, we saw a cluster of volume, which isn't a surprise. You expect to see a lot of orders underneath the lows, buyers trying to accumulate. But it fell so fast that nobody really wanted to step up to the plate for long before giving up, and it dove down again. That's where we start looking back at these previous swings. We got a double bottom on the higher low, but they did not pierce the lows. And that looks like that might have been all they needed. If we progress the volume a little bit further forward, well, that might have been a little too much, but this will give us an idea. Let me bring that back. An idea as to what the market is attempting to do. Well, I don't know. You tell me. Seems pretty obvious, right? We've got accumulation volume to the downside. They missed the lows. The POC is under at 27.75 with settlement just above that. And the market's demonstrating support. I mean, it's down, and it's having a really hard time, and I don't necessarily want to be a buyer right this second, but this is giving us a clue that they've got a pretty good shot at least. Maybe a flush down to the lows here in the 41.20s. We'll find some option plays. Nice low risk. That's not what I wanted. Nice low risk, high reward zone of interest, but that's about it. If we go over on gold, gold we can see there is a very obvious zone of support resistance back and forth on that previous major swing that was plotted on the, was that the 19th? Either way, the market came back up to it, immediately broke above it, support, 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 kind of support, broke through, resistance, resistance. Now we've broken above it. They did not hold as resistance, so the assumption then would be that they're probably going to hold as support. If we look historically, that's the side that has more emphasis anyway. The buyers are maintaining a lot more strength here than the sellers are. So the fact that it's shoved above this doesn't necessarily surprise me, but it does mean that buyers will be looking for the next pullback area back down towards those 90s. As far as a swing point of interest, they haven't made a new high. And if we're looking back on this most recent kind of trapped move down, that POC is way the heck down there at 70s. Let's see what happens. Go a little further. Oh, actually, I'm not sure because this data is bugged. Great. Makes it nice and reliable. Still has the POC way down there, but that's not right. There we go. So the POC is a little bit further down to the 70-50s, but we can see before the market even pulled back, because remember, all I'm measuring is from here to here. There's a very big node of volume, obviously defended. Secondary volume node, obviously defended. So if it is going to come back down, I mean, realistically, this looks like that lines up almost perfectly. I mean, like eerily perfectly with the bottom of rising potential channel support. That channel, side note, is derived from the top two transposed down. And that gives us not only the channel low, but we also have the volume node lining up with that definitive structural support. Everything looks fantastic around 78. It's just a matter of whether or not it's going to get there. Now, if we look at the overall move to the upside, see what the buyers want to do. For God's sake, this bugged volume stuff is driving me freaking nuts. We have a big POC that was formed kind of in the middle and then rallied up to another zone of interest. Where are we right now? We're rejecting off of that zone of interest. That's a bit of a problem, you know? If buyers are going to take this further up, that's not what should happen there. That's the opposite of what's supposed to happen there. Maybe they just need to backfill some of this volume, but we're seeing some potential signs of concern. Accumulation volume with defense. Uh-oh. Now, if you look at the really, really near term, I'm just going to go from this swing. I think it makes more sense that way. Oh, awesome. More broken data. That's fantastic. Thanks, Ninja. Jeez. We've got this this POC downweighted at the lows here. Very obvious accumulation volume. We've got an attempted slide back down, which trapped underneath the lows. In hindsight, obviously, we know that was a trap, given the response. And now we've got a higher low continuation back up. Given the fact that it broke above volume, broke back down, but it was ugly here. These are not very clean support bounces. There was a very nice one right there. But what I would like to see is for the market to come back down, hit the support, utilize the open volatility and go boop, and go back down and quickly tap that low. That would be the bounce. That's what I would like to see. Now, the nice thing about that is you don't really... whoop, that's the wrong hotkey. Whoops, my bad. Immediately exit that trade. Let me try doing the right hotkey this time. Jeez. So we've got this initial breakout to the upside, and if we can get a little bit more of a pullback, remember where we are. We have a deep L4. That is good enough for a potential reversal. That's a chance for buyers to try to keep this going back to the upside. So an L1, I mean, we're right here. There's definitely reason for buyers to be buyers way up here. I just, you know, it's Friday. I want a discount. I want this thing to flush off the lows. Give me a better price. Over on crude, what the heck? Oh no, that's not even close to right. What? Why is my? Hang on. my DPs are not correct. Let me just update that real quick. Drawing tools. Drawing objects. Oh, that's not even close. 61.45. I fat fingered a key. 66 is the low. Okay, there we go. That looks better. Like, wait, something's not quite right here. Anyway, so we got that dip back to settlement, and overall, the big move down really kind of kicked off from the 20th all the way down to the low on the 22nd. So if we look at the overall volume cluster, what did they do on the way down? They built a lot of accumulation volume, right? Big accumulation volume, but that kind of broke through. They held a little bit of a base, and when they came back, what ended up happening at that volume node? Oof. That's not great. That's a potential problem, right? That's a potential scenario that those buyers mic check? What is... It won't let me out of my drawing thing. Leave me alone. Okay. My audio... Okay. It flashed for a second that my audio messed up. No, it wasn't just you. After you said that, I had a thing pop up on my screen that said my default mic had changed. Almost like I had bumped a cable or something, but... I think everything's good now, right? Well, let me know if it's not. But anyway, so we've got this volume node. We're seeing definitive respect off 61.94. So we know what has to happen in order for the buyers to take this. In order for the buyers to take this, they need to break back above 61.94. No questions. They cannot fail lower. That would be a huge problem. If it does, then that would potentially sign a big breakout move down to the 60s, maybe even lower. This volume shift, that's a possible problem. Oh, there's my... Well, let me exit this time. There we go. Okay, great. Over on the euro, we've got a continuation back to the upside with an equidistant miss to overshoot. Got the equidistant miss at the bottom. You take that measurement from the lowest point to the lowest point. You take that measurement and deviate it to the top. They hit it almost perfectly. Rolled right back off. Markets like equalizing. This is a good example of that. It missed it down here. All right, fine. Job done. Now everything's back to hunky-dory. So that kind of story, if you will, is sort of done. But if we look at the previous move, this just went from bottom straight up to top. So no remorse. And that's after a big leg down. So if there were shorts in there, we have to realistically believe that those shorts were looking for more continuation. But, well, if we look at the volume tells us a different story. On that gigantic dive down, and remember, I'm only measuring down to here. I'm not including any of the volume after. This is straight accumulation volume with a POC, bam, right down at the bottom. Well, if that doesn't demonstrate accumulated low, I don't know what does. But given the response off of that with major higher low, higher low, higher low, L1s, all the way up. I mean, these are really kind of awkward locations that aren't allowing any pullbacks. So the fact that it reversed all the way back up to a new high, a lot of these shorts are going to be thinking, crap, what just happened? Let's go back a little bit more. They got a POC up to 20200. So that's where the shorts are assumably stuck from. If the market wants to come back, that's going to be the zone that it's going to want to try to come back to, which is very low, even all the way down 20205. So if the market's going to pull back, that's a bit of a problem. Wide open door. If we go up to the highs and see what this volume looks like, they tried doing the same thing. They've got this giant rally to the upside, obvious stop runs all the way up. POC at the top. The market, though, is above that POC. That's a big clue. The sellers were trying to get it to rotate down, and they've totally failed. So the fact that it's now trying to roll back above it, I think that really demonstrates the amount of support that's coming in here. But there's a key takeaway here. There's a lot of volume coming in above that high, and that is the equalization. So if this fails back underneath it, that is a potential massive launching point for a huge short all the way back down. Because then you've got a breakdown back through volume, back to the top of the channel, and a continuation all the way back down. Everything lines up much better over there. So this is a dangerous spot. Over on Bitcoin, we've got a breakdown. It's not really doing a whole lot. There's no divergences on the lows, notably. So that is a sign that this move down isn't necessarily over. Potentially looking for a bit more continuation, a bit more further movement, trying to get it to go, maybe back down to retest some of these lows at 47,886. Maybe there's larger objectives and we zoom out to a bigger time frame. But as it stands, we've just got a breakout move to the downside. Sellers are looking for continuation. Over on Ethereum, oh man, I mean, yikes. We can see this dive down in Ethereum would have wiped out a lot of longs. If longs were buying into this move, or if they've got the wedge breakout or breakout pullback or whatever the case may be, buyers will have been trailing on the way up, on the way up, on the way up, and then bam, this thing just got floored. So I want to see, on the way up, where were these buyers at? What were they doing? Was it accumulation volume? Was it profit-taking volume? How did they distribute? I just did it on Ethereum. I realized my mistake. Let me cancel that before Coinbase data crashes my charts. I'll have to do it on a different time frame, but that's really what we want to see. So let me get this out of the way. Golly gee willikers gold. Big push back down again. Oh, wow. That just looks gorgeous. What? What is this? Oh, boy. Oh, boy. What are we coming into? Oh, man. This is the first time I looked at the tick chart. I had my workspace on the other side of things. This just looks like an absolute train wreck. Looking at the daily chart, I mean, obviously we're pulling back. We're down to the L1. The L1 is continuing to defend, right? So we still have buyers defending this low. So they haven't even been able to close underneath it. I have to assume that there's buyers there. So anything underneath this low, viably, or at least realistically speaking, is a zone for longs on the swing side of things to be looking to try to pick it up. If there's a bottoming formation, then there's absolutely no reason why the buyers wouldn't want to be buying down here for a continuation back up going into the weekend. The question I always have a problem asking is, do you really want to hold over the weekend? I mean, there's so many things that can happen over the weekend, and this isn't crypto. I can't just trade on Sunday at 3 a.m. So that's a little bit of a risk. Do you really want to take that risk going into the weekend? Most of the time, if it's going with the trend, it feels a little bit safer. But if it doesn't gap in your favor coming into Sunday, expect the bottom to just blow off. Looking at the 60-minute chart, we've got a little bit more of a pullback. The market's pulling back. We've got support off of the L1, and if we continue to look at what's going on here, we had L1 buyers. They broke. They were given a chance to get out of break even. If they held on, right, we were talking about this a lot yesterday, where if the longs were in, it flushed underneath them and then went back up. Very likely those buyers are not going to let this go back down again. Or if it does, they're going to be looking for the next pop to get out of break even. The trade's kind of failed, if you will. So these buyers potentially looking to kind of flip the script up here, that definitely stands out. So this as a zone of resistance around the 13,823s, 825s, that could be a very, very interesting point. I mean, right now, anything would be an interesting point. This market hasn't moved. This is just terrible looking. Let's get a cleaner picture as far as what's going on over here. Get that out of the way. Get that out of the way. And let's see. So we've got the leg from top to bottom there. We've got the leg from bottom to top there. We've got the leg from top all the way down to bottom over here. So let's see, inside this trap, or inside this area, what's going on with volume? What's being demonstrated? Who's winning these battles? Who's losing these battles? Who's jumping in? Who's jumping out? Where is everything going? So let's start off with the first dive to the downside. They had their average point right around here. Assumably, those would have been buyers. I mean, let's be real, right? So those are probably buyers. Dove underneath. They form another kind of point of interest, another secondary distribution point, broke back above, and it never came back. So the buyers who stuck in on that long, right, they would have been able to move their stops to break even because, again, they're not going to want it to come back against them. And it would have rolled all the way back up to the highs, filling most of their objectives. And you can see, right, distribution volume, accumulation volume starting to come into the highs now, and then major profit taking off on the top. So that goes to show that a lot of those buyers who were potentially in, which weren't very many given the volume node, they would have exited on this continuation rally to the upside. Looking backward then, noting that this rally up was accumulated, we had a large POC which formed right inside here. Well, let's see, how did the market respond to that area? The market attempted to hold it as resistance, broke up, support, and gave up, slam dunked all the way back down. It looked like what yesterday was trying to do is get back up to this area. And it couldn't even do that. It just got whacked all the way back down again. So while the market is diving lower, what kind of volume did we see? Well, that's interesting. We see profit-taking volume. So that then would suggest that these were shorts. Might not have known it at the time. Hindsight being 2020, though, and given what volume is telling us, those were shorts, and those shorts took profit. We have not seen the accumulation volume shift hands yet. So the assumption is that sellers will continue to keep selling until we see that accumulation volume. Before I do that, let me delete that one, and that one. And let's bring this forward to today to see if they've done enough to build that volume. Yes, they have. Where's the POC? Once this stupid thing loads. 70. You want to know why we're having such a hard time right here? This is where the longs are kind of feeling like this is the last chance. Which we might not get back into this thing. So buyers, especially at the open, I'm expecting a relatively large pop to the upside at the open. Because assumably a lot of buyers are demonstrating accumulation volume, but there are a few caveats. The volume in the middle was definitely more robust, right? There was a lot, it was heavier. The POC's down here, but this one's got some thickness. So that might need to stick around here for a little while to build that up. So far though, man, swings at the open. Lordy, that could be interesting. Of course, anything would be interesting right now. If we look at the Asian session to Euro session, the Euro session is dominating the Asian session. A lot of times when we see that, more dependency relies on the highs of the Euro session and where the market wants to stand on that. If it's resisting the highs, then it'll probably be the top for a while. If it's supporting the lows, it'll probably be the low for a while, etc. Why was the free fall yesterday? I mean, there's likely any number of reasons, but the big one, the big catalyst that I heard was Biden announcing a 39% tax rate. So, I mean, that would have been the catalyst. I'm sure a lot of other news probably piggybacked on that. Like, well, wait a minute, the market's going crazy. Oh yeah, by the way, our inventories were super low, and they didn't do anything, and there's fraud over there. Everybody, look at the big news. Yeah. You know how it is. Still firmly stuck inside of the Euro session. Just, I mean, this thing looks like it's stuck in containment right now. I don't even know. Sure. We can go with whatever this thing is. Looks like a pennant, maybe. We know the support and the reason why the support is here. It's just a matter of seeing if the buyers want to follow through and keep it actually going. If we're looking on the shorter term from the drop last night, the POC cluster's at 770. Yeah, no wonder this area is a train wreck. This is everybody's average. Biden also wants to double capital gains tax for people who make 400K plus. And those types of headlines will definitely be catalysts, for sure. You know, they're, like I said, they're probably not the only thing. A lot of people will piggyback news and throw some extra bad news in there. Or, you know, nobody's going to hide good news during a bad news flush. So take it as you will. But a lot of times it gets worse and worse and worse. You get that big blow off, and now we've kind of seen where they're trying to put in a bottom at least. Market doesn't like more tax. Q stage exit right to crypto. US is going to have to catch up. We got that USDC. Maybe we just stick with Coinbase and allow them to run the country. Wouldn't we see a large breakout of that pen in the MNQ? Oh, for sure. The assumption is that the first breakout is whenever you have a really obvious structure like this, everybody's going to be watching it, right? This is not a hidden pattern. Everybody on the planet sees the same pennant. So the first breakout is more likely going to be a failure. That's why I would prefer the first breakout to be down. I would rather see it flush down, trap the lows, then pump to the upside. Because then that would allow a gap fill, a settlement fill. We know all of that volume and interest is down just a little bit lower. That will fill everybody. While at the same time, everybody trying to go long at the open getting dumped on fuels more orders for whales to accumulate more at the bottom. It just makes more sense. I would much rather see a flush down first. Doesn't matter what I want, though. So remember, this is that flurry of buy action at the open. Calls, options, buyers, whatever. They're going to be looking for longs in here, or preferably lower underneath 70, as a swing back to the upside. Because remember what happens in this middle? Not a whole lot. It doesn't stay there very long. When it starts getting into the 830s, if the buyers have enough strength to pump this above the 790s, get into the 800s, and fuel enough fire up to like the 825s, it's kind of game over, right? Nobody shows up to the party in the 830s. So that's all buyers need to spark a move back up to 870. That's really good reward versus risk. Again, I'm not a huge fan of it from the futures perspective, because the futures perspective, the stop requirement is vast. But something unlike options, definitely viable. Keep in mind, you're right at the open on a Friday. A lot of options expire. If you're trading the option that expires today, assume that you're not going to want to stay in it very long. This pump higher might give you more than enough ROI if you're trading the expiration today to make up for the rest of next week. Just don't hang on to the ones that expire today unless you want to hold on to them, unless you want them to get exercised. But that's where you're going to find the most ROI on these quick moves, these short-term options. If you're looking for one that holds on for a little bit longer, for a longer-term reversal off the lows, which I can't say I would blame anybody, then buyers are going to be looking for next week's options off of the 70s for continuation. They got above the 800s. They got to push into the 820s. Now, there are going to be a lot of buyers who are in this move, and they're being rewarded. There's also a lot of sellers who are stuck on the wrong side of this. So this kind of creates a perfect storm for a quick vacuum flush back down, or an exhaustion flush, or whatever you want to call it, a washout, to basically secure more contracts on the way down, scaring all of the original scalp buyers to the upside out, basically handing their contracts over to the swings. So a good little flush back down to like the 800s could be a viable point of interest. Couldn't even get close to the 800s. 2 minutes until we have the first 5 volume. I'd like to see just a little flush on the lows here. I didn't even have a chance to get filled. All right, see if they can push back down again. Preferably maybe a bit further now to the 795s. I tried hitting the bid, but it went down and back up so fast that it was gone. There's nothing I could do about it. Secondary flush to Euro session highs would be even more beneficial. I just don't know that it's going to be able to do that. Man, these long swings and calls and options and everything look incredible from here. Well, not from here, but if they can get back down to like the 70s. Euro session high, something like that. Scalpers looking for a strong bull bar and a continuation pop. They're going to like this bull bar up if it closes high on the 500 tick. Very nice bull bar, looking for a continuation pop back to the upside from the scalper's perspective to re-challenge back up into the 14s, 15s. But again, remember where we are. If we can pump the highs and get through 20s to 25s, it's a giant, wide open door. Yo, JHP, you didn't bill. Give me 40% everything. Yeah, I know, right? Come on, Bulls. Pop the top. Get through those 20s. Whoa! What the heck was that? Did you see that? That candle just showed up out of nowhere. That was some of the fastest data processing I've ever seen on Ninja's front. Wow. Wow, wow, wee, wow. We've got some volume kicking in here. We've got the first 5 minute behind us. Yeah, you got to rewind that bad boy. That thing went fast. 810's the volume node. Lovely. A little bit of a trap dip underneath these lows. We might be able to finally get a bit more than just the one. Ugh, I didn't get a fill again. Oh, NASDAQ, you're really driving me up the wall right now. Quick snap above. Wow, it tapped that 875 and it rejected right back off of that. and that bearishness back to the downside, I'm not going to stick around to see what happens. That seems like a lot of traders just jump ship on that up move. I'd rather see it pull back down to Euro session lows, and I don't really want to give up that much all the way back down to the base. See if they can flush a little bit lower, and we still know the volume node's down at 75. Little trap on the bottom on that 1/2. Nice little bull bar back up again. If they demonstrate support on this pullback here, then it's likely bulls will give it another shot. Not showing up to the party yet. Unconvincing. Nice little trap underneath that bear bar. Very nice bull bar back up. See if that bull bar triggers. Because the volume node's at 810. It did trigger. Nice little pullback. Shorts know that they're on the wrong side of things, so this next pullback they'll likely utilize to get out. I'm still looking to see if we can get that breakout above the highs, and I don't want to take too large of a position size up here because it's forcing me to buy super high. $8.10 testing the volume again. We do have the low side flush, but it wouldn't be a surprise to see them dip back down to like the 4/4. It also wouldn't be a surprise to see them do that in a literal blink of an eye. Come on, NASDAQ shorts. No, they're stuck. You just got to poke that high. They know they're potentially stuck. We can't say they're stuck yet. Third lower high, big bear bar back down again. I tried to pick up that little dip back down to that support zone, but I couldn't quite get it again. Beautiful support bounce. The 4/4 seem to be that spot. Of course, the 8.10s also seem to be a spot. Nice little low-sided dip. Very responsive to that break-even point. You got to keep an eye on that kind of stuff. Got a nice bull bar, but they're responding aggressively to that break-even. I want to see him get through this. I mean, more than like by a hair. There we go. Nice continuation back up to the 810 volume node. Buyers looking for a little bit more. I really want to see them get through this, but it's obvious. I have to take profit here. I don't have a choice. Come on. Go through it now. Go. Go, 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 go. Oh, there you go. Keep going. Keep going. Get through the 20s. There you go. Keep on going. Get that breakout rush. Stop is up. Ugh, immediately taken out on the trail stop. So again, the reason why I'm trailing up is because I wanted to see that breakout above the 20s and then just go screaming because it doesn't stay here very long. It doesn't stay here very long on a 15-minute perspective, right? So from the shorter term, that was not an easy one to try to stay into. I'm going to take it at the highs when I'm seeing accumulation. Finally got the pot back to the upside, the rotten bugger. All right, now that I've got a second, let me go over to the 5-minute on the S&P. I still haven't even gotten the volume note on that. 935. Ooh, this little dip back. This might be a quick little break-even bounce. I want to see how they respond to this. Ooh, they're cutting through it. What happens when they come back and test it again? Immediately resistance. You see that response on 810? It tickled it, and it just got punched in the face. Peace. Buyers seem like they're losing their grip a little bit. If we start breaking down through a new low, it's likely we'll see a push down to Euro session highs, maybe a little bit lower, back down to some of the entry bars from earlier, and then see an attempted bounce back up. But if that does happen, a lot of the buyers who have built up here will likely have then at that point shifted a POC higher, and they'll be looking for exits. Try to reverse this back down. Building some pretty obvious volume. Let me creep this forward a little bit here. There we go. All right, 5-minute volume, 35.75 on the S&P. One big definitive concern that I have is seeing a 5-minute POC built up at the highs and the market responding bearishly. That's not good. The bulls need to get back above this 810. See, if there's buyers underneath this previous bull bar, we still have 2.5 minutes. Might be a nice little scalpable opportunity on the S&P. Lovely little micro double bottom, but the context on the S&P is a little bit... Oh boy, that gets me real happy though, doesn't it? So when they do trigger underneath these bear bars, they do tend to go underneath them, so I don't have to go right at the bottom. It would make more sense then at 34. And honestly, this would be the third, let's see. 1, 2, 3. This would be the 4th time that the sellers will have tried. Where's their average? Are they stuck from anywhere in particular, or are they... Ooh, now see, they've built their average up here. So they're in profitable territory right now if they're short. That means that I do not want to be a buyer here. Are there any earlier sellers that are potentially stuck? I'm going to have to, zoom out just a little there. There we go, John. All right. That POC is just smack in the middle. Okay, so given the new information on the S&P, I'm going to assume that the sellers will be able to take 34 down to at least 33, and potentially a little bit lower. So 33 to 32.75 would be the objective. If they're shorting at 34, their targets are at 33. This does slide back down. Honestly, I'm kind of curious. 32.50. I'm getting a little greedy. But the reason why I like this is because the earlier shorts got stuck from there really badly. I mean, they were stuck from here. They didn't get a chance to get out of break even. These shorts were stuck, but they were given a chance to get out of break even. So these two are the ones of interest to me right now. So that first little snapback to that would be a point of interest. And then if they come down to here. Why am I drawing a line? Just put a stupid order on there. There we go. Those areas make more sense. Nice little dip back on the NASDAQ, back down to the zone of support. If you look at the overall volume, they have not shifted the POC yet, although they are very close. It's not going to take much more. And then we'll see the POC shift to the upside, which would also further demonstrate more POC shifting higher, along with a 5-minute RTH showing high shifted POCs. Price staying underneath that is a very bad sign. And side note, going into the weekend, I'm not hashtag not sponsored. HBO Max or whatever it is, the new Mortal Kombat comes out today, y'all. So, if that's your thing, should probably be paying attention to that. Oh man, I am so pumped. That Red Band trailer of the first 7 minutes. Oh, man. Yes, please. You just watched the trailer? Oh, it's so good. Not for the faint of heart. It's got to be your thing. But if you're a big fan of Mortal Kombat, oh, man, the graphics, they stepped up their game. POC did shift higher to 805, but volume is staying above it. That's a good sign for buyers at the moment. They need to keep it up. I know that's staying away from it to not have any spoilers. I totally get it. Mortal Kombat is my weakness. I've been playing and following Mortal Kombat since I was a kid. Arcade machines, Mortal Kombat 1, joystick, heyday. It's in my blood, man. I couldn't help it. I had to see the trailer. Okay, now we have a break back down below 805. Oh, that's not good. We're getting a dip back down to the Euro session highs. No immediate support here, but this is also a really big problem. I don't want to be a buyer here. The 805 volume just gave it up. This is a huge problem for the short-term NASDAQ. On the S&P, I know that's a problem. That's fine, because I want to buy way the heck down here. I'm okay with that being a problem. I want it to be a problem, so it goes down. Oh, that Euro session high snapped that bugger right back up, though, didn't it? Jeez. Let's see if they can keep going. There's a pretty big undertow off the highs. Nice divergence at the top. Super Nintendo. Oh, you better believe it. I wasn't trading actively, but getting back to the screens. What is the indicator on your chart? That is the MACD. All of the indicators, if you're coming back after it's been a little while, I would highly, highly, highly recommend going through all of the new course material in the Day Trading Academy if you haven't already. That would give you the biggest and best fill-in, obviously. But if you have any questions along the way, definitely feel free to ask, of course. There are two different MACDs. There's the slower and the faster, although the faster I'm still just kind of messing around with a couple other students on the VIP side with the just kind of playing around with settings, but nothing there yet, which is why you don't see it on any main screens. I just find the MACD to be what's the word I'm looking for? Truthful? I guess. I don't know how else to put it. There's just a lot more psychological basis on the MACD. Side note, this retest on the underside of this volume, a bear bar here will be looking for swing shorts with incredibly low risk because your risk tolerance is up there. But the bear tolerance, although I have a slightly worse entry, is down to 85. Shorts are looking for continuation. I want to see what they do with this POC cluster. We know that's the short area of interest, but if they start cracking above it and closing above it, that's a problem. That would also be an indication of an earlier exit. Earlier exit. No need to stay in longer than that. No thanks. And that's why. Give me 1 second, be right back. All right, I'm back. Sorry about that. All right, and that's exactly why you don't stick around on the NASDAQ when you realize the volume node has not shifted, because then it becomes a trap. Big rotation back to the upside again, seeing some small signs of accumulation above the highs. Also be potential for a 3-press top up here, although it hasn't quite hit it. Be preferable to see it go just a little further. You took the long. Nice. Great job. Yeah, it's all about capital preservation. I know that on the contrary to you took the long, for me, I was looking at the short side with a volume shift. But remember, if I'm looking at the short side with a volume shift, it's got to stay below this. That's the whole reason for the trade. We saw an immediate, it went down like 20 something ticks relatively quickly, but then it found that base and went right back up. And as soon as that happened, I don't want it anymore. Nope, I'm out. You might be lucky to get a dip back to 805 again to get out if that's where your entry was, but more often than not, if that doesn't happen, it's just going to rip their face off. It's not worth staying in the short anymore. So theoretically, although like we talked about yesterday, I don't like reversing, that would be a decisive reversal long, or if you weren't long already, another reason to get long. They failed through the volume, which is why I exited the short. If there's reasons to get long, I better not be short. Didn't get the dip on the S&P to 3250. What'd they get to? 33.25. 3 ticks. All right. Looking for a quick scalp flush off. I didn't get a fill. Off the top of the 3-press wedge. That's also been plaguing me today. No fills. All over the place. Creep this a bit further forward. Now, one other thing that we can also pay attention to, because very obviously these sellers, we know there were sellers. I mean, the assumption was that there were sellers there. I was one of them. They gave up in here. Me too. But what I want to see is, where are they potentially? We're looking at the infinite money hacks, right? These are the traders that can just print more at JP. I want to see, where are they short from? Right there. Even in the short term. So the fact that they're short from there, that's where I would like the market to come back to if it's going to demonstrate support. It would allow them to get out at break even, and it would allow new buyers to flush in. Them getting out at break even, subnote, if they're sellers getting out at break even, that means that they are buyers, even if they are shorts. Inside retest of the 3-press wedge. Looking at some of these other markets, seeing what's going on here. There's not, the NASDAQ very obviously breaking above this wedge with some decisive movement now. So with this clean break above the highs, buyers will be looking for the first pullback, breakout pullback style, right? Just like we saw in the shorter term. Gold, man alive, that thing just got obliterated. So much for holding support above the 90s, huh? Gone. Crude oil still struggling below 62. Euro. The euro's holding that perfect undershot, overshot. S&P on the 5-minute with this continuation back to the upside. Slight candle gapping, but realistically with a close at 43.75, very likely it should be able to at least try to come back a good 2 to 3 points. 41.75, 40.75 for scalpers back up. And actually, because we are coming off on resistance, I know it's the NASDAQ and correlations are light, but you know how fast these things have been going today. I'm going to slide it down just a little bit lower. The assumption that they'll slop just a bit further to 40.75 instead. Inside retest on the NASDAQ would find more scalpers trying to short the highs on the NASDAQ, but it's fairly obvious that the bulls are winning these fights. So far for the entirety of the day, the POC is sitting right at 8.05. $10 o'clock right around the corner. About 2.5 minutes. We do have new home sales at 10 o'clock as well. So we do have some news. Forecast is 886,000. That's about it, though. Yeah, exactly. And that's why I was exiting. That's why I exited earlier. We were talking about on the 15-minute chart how the market very rarely sticks around in here, right? It splits. It goes. It just rips right out. It didn't this time. That's a little bit of a concern. The fact that it kind of hit its head and stopped there, it's doing something that it hasn't normally done. It did go a little bit further in hindsight, but that exit was pretty spot on without having to sit through all that other crap. And, you know, it did go a little bit further. Hindsight 2020. A lot of the buyers who were in were likely just be trying to wait for the same thing. Like, get through these 25s, get through these 30s, press, push. It's not, though. If we look at the overall cycling from the bottom, it doesn't really give us a whole lot to work with. We've got an L3. It's okay. It's doable. We've got the break continuation to the upside. That original pullback was an L1. Continued back up to the highs and then dipped to an L2. And now we haven't had any. So. POC is being built up high. 826s. See what news wants to do in about half a minute. $10 o'clock news. S&P still has not pulled back. Previous bull bar's low is now interesting. 42.75, 41.75, etc. Oh, quick little flush back to that 826. Look at the support that's coming in there. I mean, it looks highly improbable, but this looks like bulls are trying to ramp this up for another continuation up for another big leg. We might be gearing up for that break through this 25 to 30 area if they continue holding support like that. Now they're back through it. We have to watch this 26 area, this big flush down. Ooh, we know the buyers were supporting that initially. See what happens when it comes back. Testing it, super touchy. Still have not gotten back to it, even an L1. Although the bottom of L1 is on top of the 13.810 volume node. A little better. Oof, big bear bar down again. Uh-oh. We gonna get that dip to the L2? I still like that 805. A couple different ways to approach it. You've got the build-in approach, obviously, is just buying more as the dip's lower. That's pretty straightforward. But then as far as a risk calculation goes, you really wouldn't want to see it lose ground back down below, I mean, the Euro session lows. It's just a total failure at that point. So that would likely be the break point as far as a stop goes. Can you please just let me select the stupid fib tool, please? Jeez. Thank you. 826 volume still holding again, anticipating a slightly larger pullback. As far as continuation to the upside, if the stop is going to be underneath this, that puts a 2-to-1 above the highs. That doesn't make much sense. I think it makes more sense to modify to 4/4, just for a reward versus risk standpoint. Means it's going to be a little bit harder to get a fill, but that's what fits. And that way, if the bulls do want to kick this back to the upside, that allows them a 2-to-1 objective at 32 to 33, which is pretty good. Be nice to even get it by that POC. Where do we have to go to get that to happen? How greedy do we want to get here? All right, it's not going to happen anyway, so... 10 o'clock hits, top of the hour. Market continuing back up again. Looking on the crypto side of things with the good old crypto flush dump last night. If we look at what's going on a larger perspective, this is where I like to kick into more of the. And I don't want to lose sight of everything. There we go. This is where I like to see, you know, where are we in the bigger picture? Where could the market want to be pulling back to? What might they be missing? Helps if I look at the right thing. Bitcoin. There we go. So where are we? I'm not looking to do anything up here anyway, so might as well use this time constructively. So likely, where are we coming back to, right? What is the market trying to do? If we look at these previous legs to the downside, again, I just want to see where are traders potentially on the sell side trying to get things going? Where did they fail? And then in the response to that, where did the bulls go? All right, so on this move down, they built a relatively low-weighted POC and then rotated the market back up. Is this thing going to calculate or... Please? There we go. And then ended up rotating back up again. Dried up volume, so profit taking. Not a big surprise. The next leg down, they built another POC relatively high, right around the previous swing. It makes sense that those would be buyers looking for continuation up. It flushed all the way down, stopped them out. Didn't go far enough, though, notably, to hit any of those POCs down here. That's a big clue. The market pulled back, rotated back up again. All the sellers who were in short, they reversed and went back up again. So if we look at that next leg higher, they built their volume right there at 58K. So if you want to know why I was talking about seeing short-term topping and a lot of potential resistance here, this is why. We're breaking through the volume. It's the same thing we just saw in the NASDAQ trade. It's just this is Bitcoin on a 4-hour chart. It's the same concept. They failed through volume. Nobody showed up to the party. And when they came back, it held as resistance. That's a problem. So where could they be going back to? Well, let's look backward to who got stuck. They never came back and got tested. They didn't get tested. Where are we right now? Ding, 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 ding. Now, it's still super early, right? I mean, this thing is still javelining down. But if we see a response like this, I have every reason to believe that I would want to be a buyer down here. And that might be the last time we see 50K. The last time I said that was 30, and the last time before that was 10, and the time before that was 3, I think, if I remember them all correctly. Now we're kind of hovering around 50, and this seems like this is a picture-perfect location to accumulate underneath a giant psychological level. We already know there's been a lot of pressure on Bitcoin. It's been getting held down the whole time. Ethereum's been going up to all-time highs. Bitcoin's just dinking around down here. Now we're in value. Now we're in pullback territory. So we can go back another perspective and look at where is the value considered. The first aggressive pullback was 28%, 28.25%. The full pullback, it did go a little bit further. The full pullback was 32%. So if I want to be a buyer from a 4-hour pullback perspective, the first zone of interest, 28.6%. That's value. 46,300. Notice what that also lines up extremely well with. Pay attention to that spot. Like that's the zone that you need to keep your eyes on if they're going to be pulling back, right? Everything lines up there. That's value. We're not there yet. Doesn't mean that we haven't found a bottom down here. I mean, very realistically, buyers could have bought into the 57, 58s, and they never come back. It's below 50. That might have been considered value in and of itself. But if we're going to hit them all, we still have yet to hit that one just a little lower. That's the big load up the bags, get the bulldozer ready. That's where value buyers are going to be coming in. Anywhere there and lower. And you can do the same analysis on all of them. Right, looking backward and seeing, all right, well, it's pulling back very aggressively. They broke an all-time high. Where could they be going back to? Right, that's where we can use value. The last time we saw a big, giant pullback, the first pulse down was 33.3 or 4%. About a third. The full pullback was 36. So this next pullback then, if I'm looking for a big flush, I want to be a buyer at about 33-ish%. The last pullback only made it 25. That's not enough. Maybe this one's trying to go for round 2. 1765. So now that I know my point of interest, I can go backward and see what other things line up with that. Now, this last leg down, obviously these sellers got dunked on. That's pretty low down there in the 1500s. That might cause some problems. If we look at the responsive leg back to the upside, you build the story. Supportive bounce there. POC still very low. A little bit lower. Now we've got a higher weighted POC. So the only one that really lines up nicely is 1788, around that one. Otherwise, there's a concern that this could dive a little bit lower, maybe down towards the 1500s. Same analysis in all of them. If you're looking to buy the dip, right? Look where the dip is and then buy that. BNB was the last one that actually showed up as far as a dip perspective goes. That high to the previous pullback on that first pulse was a 46.3% pullback. If you do the same thing from the highs, not even close, right? 46 would be 340. And the volume node is an Intel 260s. So you want to talk about overvalued. Yikes! Not that BNB doesn't have utility, but I think everybody's starting to realize, like, wait, maybe we hype this thing up a little too much. Nothing's happened. The market's still hovering. Continuing back up. We are still cutting through this zone, although they're doing it in a really disgusting way. The S&P, I don't think is going to pull back ever. Maybe at some point, right? Got the previous bear bars low. We haven't even triggered below a previous candle. It's a bear bar, so I'll give them benefit of the doubt. Only scalping up here, though. That's the only viable thing to do up here. Nothing else makes sense. Oh, sorry, Vicky, I didn't see the question. How do I get the POC? So the POC, first off, on NinjaTrader at least, the there are a few things to consider when you're talking about the POC and the order flow stuff on NinjaTrader. NinjaTrader's platform when it comes to the order flow is super buggy. Sometimes it works, sometimes days don't work. It's sloppy. So you might be better off maybe going with a third-party purchasable application that's a bit more reliable, or a different platform. I know a lot of us are kind of stuck with NinjaTrader just because it's been in our life for the past decade. But those POCs come from the order flow volume profile, I think is what the indicator suite is called. That's on the when did they update that on Ninja? That was probably a year ago now. The most recent version of NinjaTrader 8 when they updated that, and they added all of those volume order, all of those tools. You can find the one that I use here under the drop down, which is right here, order flow volume profile. I'm on the MNQ and I have an order flow volume indicator plotting. I see the volume showing a large volume node at 13,826, but it's not plotting the actual number like I see on your chart in the golden color. Why is that? It's plotting the volume node at 775. That might be one of those bugs that I was talking about, because we've seen it before, especially on like the 15-minute chart where like an entire day just won't work. I don't know what's going on, or if there's just some weirdness with Ninja after the rollover or something, and hopefully it fixes by next week. I don't know, but your data is not the only one. Mine's also very messy. That's why that was the first thing I wanted to make mention of, because I've had it a couple times where it doesn't show up or an entire day doesn't plot. So honestly, I could give you an answer, but I don't know how reliable that answer is, because it could all just be chalked up to buggy data. Yeah, that's kind of the issue, you know. What's the difference between a pullback and a correction? Isn't that the question of the year? Generally speaking, right? In the perfect world, okay, and keep in mind this would be the perfect world, and actually let's use examples, because I want to see actual examples of this taking place. Let's go to one that I don't have all marked up though. What the micro NASDAQ? I don't have too many. I think I've got like maybe 1 or 2 trades on there recently. So as far as a pullback goes, what you would generally want to see on a perfect pullback is, from a volume perspective, would be, well, volume or price going down while volume increasing. Right? That would demonstrate accumulation volume in the perfect world. Now, along with that, in that perfect world, you would also see that volume line up with some other previous levels of structure. And I don't want to go too much into detail with that one, because we're going to be talking heavily about this weekend in the VIP webinar. But utilizing previous volume levels of structure to line up that really create a big 1-2 punch. So if you're looking at this pullback here from like top to bottom as an example, and you see this move down, the best scenario would be seeing volume build the whole way down. That is not the case. In this case, we see a little bit of a cluster of volume above the highs, maybe sellers selling the high, buyers taking profit, I don't know. There's volume above the highs. And the POC cluster pulled back here. Well, why would they be buying there? I mean, let's just use common sense in our eyeballs. That's pretty much the low of the range. Realistically, they would be buying there because their risk is small. They don't have to risk very much, but their reward is very high. It's a great spot. Bad probability, right? But it's a good spot. They were immediately stopped out or given the chance to get out of break even. But that creates a zone of interest where, all right, what do they do with this? If this is actually a failure, if this is more than a pullback, then we'll see the sell side volume hold on the other end and break a new low. They held the other end, but then they made a higher low and failed. That's a problem. So this now tells us that this was attempting to be a correction into a reversal, and the sellers who were trying to get that job done have just failed. So you don't really know that this is a pullback until way over here, if that shines some light on timing. You don't have to be the first one to the party. In fact, more often than not, it causes more problems. Let everybody else use their money and their accounts and all. Let them do the heavy lifting. Come in later. It's usually easier. Less risk. Because if you're wrong, then you get stopped out underneath the lows when it breaks back down underneath the volume node. Maybe a little bit lower. But if you're right, the reward is still 2 to 1. It moves faster from there. You know quicker. I like quick response, you know? I like knowing. Still not getting the dip on the S&P. It's getting a little later in the day. I'm just gonna drop that one. How do we join the order flow meeting on Saturday? Yeah, so if you go over to SSFTG, or if you have the app installed, just open up the app and go into the VIP zone at the top here. Yep, hang on, everything's loading. There we go. So go to the VIP zone at the top. And within the VIP zone, that's where you'll see the link to join the webinar. So everything that you need to know is at the time, so 10 o'clock Eastern tomorrow, you click join the webinar, you got the password, you got everything you need to do, and you're good to go. Obviously, now that I've just shown that on screen, I'm probably going to have to change the password again, but you know, that's all you got to do. So you click that, type in the password, you're good to go. That will be recorded because I know some people won't be able to make it, and the recordings of those VIP webinars I post down here, so you can watch them back. Usually last about an hour-ish. All right, let me do an order double check going into Friday. Make sure I don't have any orders floating out in the middle of space here. Nope. Nope. Man, alive, gold just got absolutely clubbed. Wow. That's nuts. Oy vey. Anyway, let's see. What do the numbers look like for this week? What was the first day of the week? The 19th? Yeah, the 19th. Okay. I don't care about the dollars and cents. I just care about the ratios and percentages. So for this week, a little bit better in terms of accuracy, a little worse in terms of reward versus risk. So it's a pretty obvious trade-off there. Let's see, 73.57 minus 100, 26.43. 26.43, average loss is 33, so minus 872. That leaves 73.57, and the average winners were 23, minus 872.19. So a little under a normal week, but right around the average, right around the norm. So we know that from a standpoint of trading approach, we didn't do anything stupid. Or I didn't do anything stupid. I followed the plan. I did what I was supposed to. My numbers reflect that. Okay. Good. Now, if your number came out negative, because it's always good to double check your number every week, every month, not necessarily every day. That might be a bit overkill, unless you're scalping a ridiculous amount. You know, if your number came out negative, that doesn't necessarily mean you're a horrible trader or anything. That might just mean you had a bad week. If you have a negative week, which happens to everybody, I promise you, your number is going to be negative. There's nothing you can do about that. As long as the negative number is within the realm of the norm. If we look at the numbers and we go back over every single time that I've looked at these on the Fridays, on the weeks past, it's been plus 1,000. Actually, I think last week was like plus 13K, but that was a huge run or whatever. I'll disregard that one. The one before that was like plus, I think like 900 or something like that. The week before that was plus 1,000. The one before that was negative 900. And that negative 900. It's right around my normal average winning too. It's all in the same realm. That's why I check the numbers. You got to make sure your numbers are correct so that you know you're trading correctly. If it does come out negative, it should come out right around the same point, or preferably lower. Might also mean you don't have very many trades to catalog against. You might have to increase the amount of time in between your checks, but I like doing it at the end of the week personally. And when you see it every week like that, well, you can understand consistency up and down. That's why you check it. Make sure you're not doing anything dumb. Silly question. Is that your dog on your screen? The yellow dog? No. No, that's Doge. That's the Shiba Inu that is on the Dogecoin. Space Doge. Oh, that's funny. I know it's cute. That's why Doge is awesome. Among other things, right? Shiba Inus. It's that stupid look on his face. I love it. Ugh. But I exited the majority of my Doge position on... when was that? When we were talking about that? Like 36, 37 cents, whatever it was on that pullback. So I should probably change my background now. I'm not so Doge weighted anymore. Yeah, exactly. That's what it is. Yeah, and we've got our call at 2. Yep. Have a great one. Enjoy the weekend. Yeah, I did have a couple trades today. Sorry, I've got the micro NASDAQ open. On the regular NASDAQ, you can see them inside there. I had the initial long, which I was obviously very early to the party. I was looking for a breakout move above the highs. It didn't work. Took the exit. Tried getting it to go again. And the way that it was looking looked like they were trying to get that trap going, but the lows were not supporting it at all. This bear bar came in, immediately jumped back up. So I added a couple more on that flush. Exited 2 of them at around the original entry point, locking in a little bit, and then taking the final one up back towards those highs. The next point after that, sorry, I got to move it to the left so I can see my cats in the way. We have this drive down. I tried looking for a short reversal on the volume breakdown. That did not succeed. Immediately exited. And so that was just a quick to get in, quick to get out type move. I didn't want to give that back, and you can see why. When that happens, get out of the way. So, where do you buy for the ES? This thing's a freaking rocket ship, isn't it? I mean, in terms of the ES, the first thing that I would want to see is where are we on the bigger picture? What are we breaking out of? What are we showing or demonstrating some potential resistance from, right? So if we go from like this giant leg to the downside, obviously there's going to be some interest inside here. I just want to see where it is. Whoa, that creates a bit of a problem, doesn't it? that was completely unintentional. Well, that's where you sell, right there, 41.49. If sellers are going to hold it, that's where all of the buyers who were trying to accumulate the lows, which we know they did because their volume is there. They showed their volume. We know their hand. Their hand was wrong. They got absolutely annihilated. But if they're still long, those infinite money hacks to JP Morgans, they can buy more. And when they buy more down here, where are they looking to exit? Their original entry point. Guess where we are? Right back at that original entry point. Talk about timing, huh? So right now, this is the point of interest. What happens here is very important. From the sell side, because the market is currently going up after attempting to rotate down and failing, I would much rather see lower high, rotation down, and then look to sell like over here, real late to the party. Because if this does break out through the upside, then you would expect to see something like this. So 41.49 is the line in the sand right now. That's where the decision will be made. Honestly, I think the decision's already been made. I think the shorts have gotten ran over. But they've got one last line of defense. Going into the weekend, yeah, we can take a look at a couple while I'm waiting for some questions. Feel free. And if there's any markets you want me to take a look at, throw those in too. As far as markets on this pullback, looking across the board, we'll start off with basic attention token, good old BAT. As far as BAT goes, I mean, it's a pretty obvious pullback zone of interest at around the 92 cent mark, dollar. I mean, it's a huge psychological point of interest. Buyers will be looking for accumulation here, but of course, it is always good to reconfirm with some volume or something that helps out the move. Previous move down, their volume. So they tried to hold the support at $1.18. That could be a little bit of a problem. Let's see what the volume looks like from the top. Okay, so the buyers are obviously not buying yet. I think it's a little bit early. If we go across this entire cycle to the highs, Oh, POC up at the top. What about before that? POC up at the top. Yikes. So I really don't see any support on basic attention BAT until the 80-cent mark, aside from where it's hitting right now. Obviously, the 90-cent mark is support, but 80 would be the next one. Maybe even lower, like 70 would be really nice. On Bitcoin, we already talked about that one. Major support just a little bit further down. Ethereum, we already kind of talked about that one as well. I'd like to see that get down below 2K, down to like the 1700s, potentially even down to the 15s. Litecoin. Ugh. Oh, Litecoin. Lordy. I think it's pretty obvious to see what they're doing, huh? So what would I like on Litecoin? One more push. 200. Give or take. Stop doesn't have to be very big. The reward is way the heck up back at the highs. So Litecoin, very, very interesting. Just a little bit further. Let's refine this area, though. Let's pinpoint this. 201.25-ish. Okay. Bcash. I mean, they already had the bounce, 722. That one's already happened. Phenomenal response off of that already. ADA, Cardano, as far as the Cardano rally goes up, probably have to start from the lows all the way up to the top. Yeah, their POC's just smack in the middle. So we'll probably have to go back to the last rally. There we go. Yikes. Cardano doesn't have anything until 32 cents. Got the swing low down here at 67, I guess. BNB, Binance, we already talked about that one. That's down in the 260s, 270s. They have a mile and a half to go until they hit that one. Doge doesn't have any volume support until at least 12 cents. So I am no interest whatsoever. The support that was trying to show up in the 25-cent mark, they've given up. So if it comes back, I'm going to assume that those buyers will exit. More downside to likely come. EOS... that last move down here looks nasty. 375, 380, something like that. What's the volume up look like? Yeah, they just lost their grip underneath the 625s. So let's see if they can get back into that volume node. POC's down to 370s, but underneath 4. Link. I mean, Link already kind of has the pullback. That was back at 34. If we extend... Let's go to the next low inside that. The next pullback zone would be 2775-ish. Neo had their first pullback zone, which operated a fantastic bounce, 95, all the way up to 105. Now that we've got the continuation breakdown lower, unfortunately for Neo, there's not a whole lot. POC's down at 41. Show me something better, Neo. That didn't help at all. That's 42. Neo scares the crap out of me. I wouldn't touch Neo with a million-foot pole. Tron looks a little bit more interesting. We're back down to the 10-cent mark. Tron is a huge proponent for a potential pop back to the upside around the sub 10-cent mark. Big psychological zone. If we look at the overall move, pulse to the upside, first, the original leg had all of that volume at 5 cents. As we creep this forward, we can see that the majority of that volume did lift a little bit higher to like 5.26, big volume node at the 6 cent mark. But as we look above that, after they broke out above those highs, they built in some massive volume at the 13.5 cent mark, which has recently acted as resistance. Look where the volume is building up now. Let's further refine this so you can see it a bit better. I was going to say hello. There we go. So this volume node right here, this is the one that they're fighting on. So if that loses their grip, maybe they've got a 3-press wedge or something they can fiddle dink around with. But if that loses its grip, they don't have anything until 6.5 cents. Which I know is only 3 cents, but that's a 30% drop. Nobody wants to sit through a 30% drop. Over on Uni, good old Uniswap. Was looking halfway decent until they pulled this crap. Then it stopped looking good. Total gear shift. Total direction shift. Now, we have had a little bit more time, so if we bring this back to the highs, we can see that they're trying to build accumulation volume at around the 3175s from lows to highs. Now you can see the zone of support, 29. That's where all of the buyers are hanging out. And look at the risk. I drew those colors totally backward, but Ripple, I don't really even want to look at. Lumens, whew, man, what a flush on Lumens. So the big one is going to be off of those previous highs to lows. They lost their volume underneath that at the 50-cent mark. That's a huge psychological loss. So that's a bit of a problem. In terms of the rotation back to the highs, that's what they're defending right now. So 39 cents, 40 cents or so. Let's refine it a little more. $0.40.50. That's what buyers need to show. From the top to the bottom so far, POC's way up at 61. What's wrong with Ripple? There's nothing wrong with Ripple from a trading perspective. It's just from availability perspective. It's a little bit more difficult to hold on to Ripple. And a lot of times in the past, we've seen Ripple get just wiped out of exchanges, so you can't do anything with it. It's a dangerous from that sense. At least if you live in the U.S. Outside of the U.S., it's much safer. You don't have to worry about all the regulations that have shut down a lot of U.S. traders and let them be bag holders with money they can't do anything with. But from a Ripple perspective, from the move up at least, if we go over, put that on the highs. Oof. So there's obviously volume that's been built up around the dollar mark. What a shock. Would have never thought. That's where buyers want to support. But if it does slide a little bit lower, then you've got 54, 55, 56 cent mark. That's a little tough. Now, if we increase this forward, we can see that they built their POC up at $1.37. If those are longs, and that would be my assumption right now, they're buying the pullback, looking for continuation up. They haven't done anything. They're building a bit more volume down here, but the majority of this volume took place over here. This is new. So this really doesn't give us a whole lot of extra, and we haven't seen any signs of accumulation yet, although they're trying. This would be that third point where they build the accumulation. So if Ripple wants to find a base, $1.90 makes a lot of sense, as long as they show up there. CRO, CRO slipping down below the 20-cent mark. They also lost their POC cluster on that last drive down. Next zone of support isn't until like 12 cents. Nexo is hovering, although I have a lot more faith in Nexo. Not that there's anything wrong with CRO, it's just Nexo I think offers a lot more, not utility. Utility is definitely CRO. Nexo offers the DeFi side of things, which is definitely a hot topic. So Jeez, DOT is in a definite value zone. IOST still kind of garbage. Nothing going on there. Can you chart best? Bitpanda versus the euro. Oh, versus the euro? All right. So in terms of best versus the euro, I mean, this is obviously just screaming to the upside. This big breakout above the highs, that's going to be kind of the point of interest. So I'm kind of curious here. Okay, I mean, first of all, the obvious point of flux is going to be the top of that big bull bar and the bottom of this big bear bar. So $1.60 and whatever price that is are huge zones of interest. We're sitting right on top of that one right now. From a volume perspective, the most recent drop from top to bottom, their entire dollar node was back at 207 euro. If we look at the one before that, that was at 157. So, I mean, we're in a value territory right now. Seems like a scam. Yeah, I know, right? Up, 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 up. Just watch out for those pullbacks. That's all. All right. Well, we're after 10:30. It's been a good week. It's been a good day. Overall, seems like a good spot to call it. So that's going to do it for today. As per the usual, you'll be able to watch the recording back whenever you want. You can just rewind it on YouTube and watch it at your leisure. If I miss any questions, feel free to shoot me an email, jhb@ssftg.com. Otherwise, though, enjoy. I hope you had a great week. I hope you had a great week. I hope you had a great week, and then I hope you had a great day. Just try to get the words in the right order here. But outside of that, enjoy. Like I said, for you VIPs, we do have our webinar tomorrow. Yeah, it's English, I know, right? We've got our webinar tomorrow, which is going to be at 10 o'clock Eastern. Remember, we do have some weird time zones if you're on different parts of the world, especially with all of the different time zones and daylight savings and not daylight savings and whatever. So just make sure you're at the right time. But if you miss it, it will be recorded to be able to watch that back too. All right, that'll do it. Enjoy, rest up. I hope you have a great weekend. For the rest of you, we'll see you all back on Monday. For you VIPs, we'll see you this weekend, all right? Have a great one. We'll talk to y'all later. Thanks.